Hello viewers, welcome back to our YouTube channel, KC Accountancy Education Center. And in this video, we are going to look at the relevancy of this paper, Advanced Financial Management. In the previous video, we looked at the examiner's expectations as far as the introduction, because we are still on the introduction to Advanced Financial Management, and we haven't looked at any topic. So we are going to focus on the relevance of Advanced Financial Management. Advanced Financial, permit me to use AFM for Advanced Financial Management. This is CPA paper 15. So the question that we want to understand is how important is this paper, because we don't just want to have things on the syllabus when we don't actually know their impact on the overall CPA paper. So there are things that we are going to be looking at as far as Advanced Financial Management is concerned that are currently or that are prevailing. We are looking at things that are actually happening in the real life. So we are basically going to be, it's relevant because of those real life scenarios or real life cases that actually exist, and that calls for the student doing a CPA to be able to understand those aspects. Now, when it comes to these issues of corporate restructuring, the topic has been revised slightly, but because we also have corporate restructuring on level 2, that is financial management. So here it has been revised a little bit, but what they are leaving here is there are things that they are leaving out, things to do with mergers and takeover, mergers, acquisitions and takeover, mergers and acquisitions, then takeovers. So those are the things that they are leaving out. So these are some of the things that we are going to be focusing on, and these are some of the things that we see. So these are the things that they have included, and these are things that are actually happening. If we shall look at things to do with, because if you talk about mergers, acquisition and takeover, we shall look at things to do with NC Bank, what happened to NC Bank and the Bank of Africa. We saw they formed the NCBA, but there were two banks, NC Bank and the Bank of Africa. When they joined, they formed the NCBA Bank. We also looked at this Orient Bank was also, it was maybe a takeover because it was totally changed from Orient to something else. So we can also look at issues to do with UTL, Uganda Telecom. There are cases, even though the company was not sold, but it has gone into some restructuring. They are changing from the normal way they used to do things to doing other things. But the UTL, because it had issues, but they are trying now to they are trying to revise the things that they are supposed to be providing, and they are trying to transform it into something. So they are even trying to change most of the things that they are doing from there. So that's one way we could talk about the corporate restructuring, because even the management itself has to be restructured if at all you are trying to bring in something new. If you are trying to change, if at all, if let's say you look at NC Bank and the Bank of Africa, you don't think that they are going to retain all the people, or they retained all the people that were in the NC Bank and the Bank of Africa, because one reason as why you could come together is to be able to enjoy benefits, maybe to cut down costs and others. So some of these costs are not going to be incurred by people coming together. So synergies and other reasons may force companies to actually join hands. Even the other case that could highlight the restructuring was when, of course, you remember when the former CEO of NSSF, Mr. Byalugaba, he did some restructuring whereby he sold some vehicles, company vehicles that were in different branches. They were all sold off, because most of the times you find that some of these assets, they are there, but they are not actually generating money. So it was seen that most of these branches, the upcountry branches, had vehicles. And when you have a vehicle, it means they leave alone the cost of the vehicle, but their cost of the drivers, their cost of the fuel, their cost of maintenance, and other servicing costs that you are going to be incurring. So all these costs, when you come up with a strategy of restructuring or of selling off some of the assets, like what the CEO did, to sell off the company assets, the vehicles, those that were in those branches, they were sold off. It's one way of cutting down costs. Because when he came in, he found it unnecessary, of course, to have company vehicles taking people's, being allocated money for servicing, fuel, driver, and other aspects that were not, in his opinion, they were not required. So he sold off these assets, all the cars, all the vehicles that were there at these different branches, and that's one way. That's some of the kind of restructuring that we may talk about. So we need to understand restructuring, because we will find a question. The question may not be directly on restructuring. The question may be bringing in scenarios that are related to the companies that we know, and they are going through the same process. Maybe they are merging, maybe they are buying them out, or they are selling their shares. So that's one way how this paper is relevant, because we need to understand these aspects, because they are practically existing in the economy. Then the other reason as to why this paper is relevant is the fact that the need to finance huge investments, or we can call them big ticket projects, forcing companies into debt. Of course, when you look at things to do with analyzing the debt finance, you will also be in position to get knowledge on things to do with gearing and the cost of debt. So it will be a little bit harder for you if at all you don't have the financial aspects of how we can be able to get the cost of debt, the cost of equity, depending on how the organization is going to be financing these big ticket investments. So these are going to be basis, or they are going to be key. And normally students, they always confuse themselves with things to do with ungearing and gearing. And we shall see some of these aspects we will be able to understand, because the question will also be there. So you have to understand how to ungear or how to regear, because these are some of the things that are not going to miss out. And sometimes they bring it as part of any question, maybe as part A, then maybe it can also come in section A. It comes as part A, then maybe another question that can come in. Like if you look at the December 2022, we had issues to do with corporate restructuring, where you had to get the cost of capital by trying to gear and regear, or gearing and ungearing. So we shall look at some of those different aspects. So the need to finance those big investments, they call for the knowledge of financial management. Then the other concern is basically with the current shift to international trade. So you see, even the coffee we produce here, we can be able to export it. So the need for international trade, or the current shift in the operations or in the economic way of life. So the moment you get into the aspects of international trade, there are other things that you are going to be looking at. One of the things that you may look at, as far as an economy being looking at the international trade aspect, you'll find things to do with foreign exchange risks. So we shall talk about hedging of risks, hedging of interest rate. We also have interest rate risks, because we find that most of these companies that are coming in our country, you find most of them, they are South African companies. They bring the capital from outside and they bring and invest it in our economy. If they are banks, those like Stanbic, they are part of Standard Group, South Africa. So these companies, they need to manage, at the end of the day when they are operating here, they need to manage the money they got from their head offices. And we need to be looking at how they are going to be doing the kind of reporting, the kind of risk in terms of foreign exchange losses and gains, in terms of the interest rates and other aspects. Because if these companies, they are coming as branches or as subsidiaries of the group that is overseas, then it means they are going to be sending money or goods, whichever item they are dealing in, from their head office to the branch. So that will call for different risk, or there are different activities that are going to be involved. Then we also have things to do with political risk, and it also has become critical. So the examiner is heavily pronouncing in the syllabus these aspects. So we need to focus mainly on things to do with hedging of forex or foreign exchange, and also hedging against interest rate risks. We saw it in December 2022. There was 2 questions that had those 2 elements. And these items, they are mainly used in foreign exchange or forex businesses. But of course, we know that hedging is a little bit different, and it's a bit easy under financial management, since it has both the theory and then the computations. And that's why we want to look at specifically how we can be able to hedge the interest rate risks and other aspects to do with forex or foreign exchange. So, as I said, we have the theory and also we have the computations. So there is no way you are going to ignore these computations, because most of the businesses, they are importing products, they are importing raw materials, they are exporting their produces. And by so doing, we are going to have things to do with foreign exchange issues. And we need to understand how we can be able to tackle that. So that's another relevance of us understanding this, because the things that we are going to be doing here, they are applicable in the real life situations. So, and most of these things you find them in section B. Then the other that we can maybe conclude with is studying corporate governance. Corporate governance is just how things are managed, how the business is managed, basically. And it is important because corporate governance is cited in the collapse of different companies. If businesses are not going to be managed well, we've seen some banks collapsing. And we shall look at some of the businesses that collapse. We have things like Enron. These were companies. Greenland Bank. These were Ugandan banks that collapsed. Then we have also international companies that also collapsed, like Barings Bank. It's one of UK, Britain. So it is an issue of it's an international concern, whereby if organizations are not managed well, if the activities within the organization are not managed well, then it can lead to the collapse of different companies. And we've seen this happening. So we want also to look at the reasons as to why students fail this paper. Why students fail paper 15, CPA paper 15, that is advanced financial management. We want to cite out some of the things that have been communicated from the examiner's point of view, but also from the comments, because we have, as you know, that we have these comments. You can download them from the Institute of Certified Public Accountants website. As you are downloading question papers, you can also download comments of what the examiners have seen from the different students that they have marked. They also give the overall performance, and they also look at what happened. They try to explain, if the pass rate has been poor, why are we having so, or what brought this pass rate to actually be a bit lower. So want to cite out some of the things that are going to help us understand from the start that at least these are the things that are making people to fail, as from the examiner's point of view. But this is going to be in the next video, where we're going to be focusing on why students fail, and also we try to give out a detailed, a summarized overview of what we are going to be covering as far as advanced financial management is concerned. So it is going to be like an overview of the syllabus. We know we have the syllabus, we have the detailed syllabus as provided for by the Institute of Certified Public Accountants of Uganda, but we want to give a breakdown of how we are going to be talking about some of these aspects. We are going to start with which topic, and we are going to end with which topic. So there is a strategy that we want to, there is a pattern that we want to look at, basing on what the remarks of the examiners are, or what causes the students to fail. At least we start by resolving the things that make students fail, then we'll be able to maneuver through our syllabus. So thank you for watching. Let's meet in the next video.